What happens when a leader rewrites the global economy and threatens war all in the same week? You get Liberation Day, April 2nd. That's right, President Trump just brought tariffs roaring back, targeting over $1.5 trillion worth of goods across more than 25 countries. And the markets, yeah, they flinched hard. The S&P 500, it just slipped into correction territory, wiping out $2.5 trillion from the market. Liberation Day is starting to feel a little bit more like Liquidation Day. And it's not just the tariffs. Trump's also threatening strikes on Iran and energy tariffs on Russia. Global tensions are rising, and caught right in the middle of it all, yep, our beloved Bitcoin. But here is the twist. While traditional markets are dumping risk and running for cover, some of Bitcoin's biggest backers are stepping in. The FDIC, you guys know them well, the Federal Deposit Insurance Corporation, just cleared US banks to engage with crypto. No prior approval needed. That's a regulatory green light from the very top. And Mara, one of the biggest Bitcoin miners, just pulled the sailor and raised $2 billion to buy more Bitcoin. That is institutional money flooding in. So what does this mean? Is Bitcoin really stepping into the role as a safe haven asset? Or is this just the calm before the inevitable storm? In today's video, guys, we're gonna break it down. If you're excited for this video, do me a favor and hit that like button. It's a free and easy way to help the channel. And if you're new to the channel, guys, welcome. My name is Chasse. I've been in this industry for 13 years. Really happy to help you guys make these videos on macro news, tech, politics, and everything as it relates to the crypto and digital asset industry. Also, if you know someone who could benefit from watching this video, please feel free to share with them as well. It would mean a lot. And let's get back into it, guys. For weeks, Trump has pinpointed this Wednesday, the 2nd of April, as Liberation Day, the biggest escalation of trade wars to date. And on that day, Trump is expected to announce reciprocal tariffs, 20% tariffs hitting up to 25 countries, potentially impacting $1.5 trillion of imports. And Mexico, well, viva la Mexico. Viva Mexico. Mexico will have its own Liberation Day on April 3rd, when it's expected to announce counter tariffs, reciprocal tariff on reciprocal tariff on reciprocal tariff. It's not exactly the kind of gains we'd like to see, I know. But according to an analysis from the Tax Foundation, we can soon hit tariff levels not seen since 1946. Until this weekend, perhaps the only country not mentioned in Trump's string of tariff announcements was Russia. Apparently, Trump and Putin aren't as buddy-buddy as they were after the meeting earlier this month. Now, Trump is pissed at Putin for criticizing Zelensky's credibility. And apparently Zelensky's trying to back out of the oil deal. It's a mess over there. Let me know in the comments below what you guys think is gonna happen with the Ukraine war, Russia, everything like that. And while this has broader implications for the Ukraine peace deal, Trump has also threatened to impose secondary tariffs on Russian oil. Basically a way of saying that, Putin, if you don't comply, we're gonna tax you till it really hurts. And all this is leading to one thing: massive, massive uncertainty. We haven't seen uncertainty this high since 2020. So what does this all point to? Well, word making the rounds over there on Wall Street and Main Street is the dreaded S word, stagflation. See, stagflation occurs when the unusual combination of stagnant growth mixed with elevated inflation. So let's take a look at the tape. GDP, well, it's projected to be negative. A real-time estimate of GDP published by the Atlanta Fed is now pointing to economic activity shrinking at 0.5% rates in Q1. In this chart, you can see what a drastic change has occurred from positive growth to negative growth just over the previous month. It's like slamming the brakes on a car doing 80 miles per hour. Last month, we were cruising with momentum, And now we're skidding straight into contraction. And if that wasn't enough, what about inflation signals? Well, there's too many to mention. Last week, core PCE, was kind of like inflation index, was higher than expected. It rose to 2.8%. Take a look at PMI. The US manufacturing input price index jumped 65 points in March, the highest in 31 months. Service input price index rose 60 points, the highest level in 18 months. Businesses are feeling the heat. Rising input costs usually trickle down to consumers, meaning inflation pressures are quietly building again. And that means higher prices of goods for you and me. Growth is slowing and inflation is still above target. This is textbook recipe for stagflation, and it's becoming more likely by the day. There's a clip here of Trump being interviewed in the airplane. Let's listen to what Trump has to say about stagflation.
Very much. There's a lot of discussion about stagflation now. Is that something that you're worried about, given the impact of your efforts to readjust the economy?
I haven't heard that term in years. No, I don't know anything about it. This country is going to be more successful than it ever was. It's going to boom. We're going to have Boomtown USA. We're going to boom.
He's not worried about it at all. Anyway, here's the thing. This could be the moment when everything changes for Bitcoin. It could flip the script from massive uncertainty to massive upside potential. And if you're wondering why I think that, all you have to do is look in one direction. Gold. Gold is absolutely ripping right now. We're seeing massive inflows into gold ETFs to the tune of $12 billion in just 2 months. That's the largest amount of inflows since 2020. And guess what? With inflation fears and stagflation creeping up, gold is becoming the ultimate safe haven asset. Yes, Peter Schiff is thrilled right now. But this could spill over into Bitcoin, the digital gold. While the world is piling into gold, don't forget Bitcoin is there, just waiting to capture that capital once the dust settles. I know Peter would say it's not going to happen, we're losers, but it will happen. Just watch. So what does all of this mean for Bitcoin? There are signs of hope that Bitcoin is moving from sidelines into financial mainstream. If Bitcoin truly is going to become digital gold, the developments we are seeing now are the exact path we would expect institutional adoption to take. As we've been tracking for weeks now, the SEC is finally loosening its grip, backing off the crackdown and easing up on crypto regulations. Stablecoins are going mainstream and becoming more integrated into the financial system. On Friday, the FDIC, that's the Federal Deposit Insurance Corporation, gave the green light for US banks to engage in crypto without prior approval. This is monumental because if it eases the path for banks to use crypto, then the companies that rely on those banks will also face fewer barriers. We're moving away from the days when the companies could be debanked simply for holding Bitcoin. And I know this too well. I was debanked from banks, from Western Union, MoneyGram, PayPal, everything. But today, hey, it's all good. Think of it like this. Before, if a bank wanted to touch Bitcoin or crypto, they had to beg for permission and still get shit on. Now, they just have to give a heads up. Imagine you're a bank, like you're an executive at, like, say, JP Morgan. You've got high net worth clients asking for Bitcoin exposure. Before, you'd be stuck in regulatory red tape. But today, my friends, you just shoot a little email over the FDIC and boom, voila, you move forward. That's not just red tape being cut. That's a green light from atop. It's the government going from don't you dare to just be responsible. This is how revolutions happen. Quietly, then all at once. And corporations are coming. 2 new players joined the fray last week. First up, GameStop. Yeah, baby, that's it. GME, Wall Street Bets. You heard it, GameStop. The meme stop king just made its boldest move yet. It's officially becoming a Bitcoin company. They're pulling a sailor. Yep. The board unanimously approved a new treasury policy to hold Bitcoin on the balance sheet. And with $4.6 billion in cash, even a small allocation could be a massive buy. But it doesn't stop there. GameStop is also raising another $1.3 billion in equity. And yep, that war chest is expected to go straight to Bitcoin. This isn't just another headline. This is retail rebellion planting its flag in Bitcoin territory. Mara, who admittedly I kind of just wrote off before just because it wasn't making huge moves, but they just pulled a sailor too. And they just raised $2 billion, to go buy Bitcoin. And before they could pull the actual trigger, Michael Saylor just dropped another $2 billion into Bitcoin like it's a casual Tuesday, Taco Tuesday at Saylor's house. This isn't just another wave of bullish news. This is a major shift happening in real time. I mean, imagine like all of these companies with such a little bit of Bitcoin being mined and produced every single day. The supply shock is insane. And yeah, the price isn't at $100,000 anymore, but are you listening to what is happening? This is absolutely insane, the amount of Bitcoin being bought up every day. And GameStop was just another addition. But imagine when the Bitcoin Strategic Reserve finally starts buying more Bitcoin, and yes, it's happening. And that, in my opinion, will give the green light to the Magnificent Seven who are all valued in the trillions of dollars. Apple, Microsoft, Tesla holds Bitcoin, etc. In my opinion, they would be doing their shareholders a disservice to not be allocating some of their money on balance sheet into Bitcoin because they have a financial obligation to do what's best for their shareholders. Now, they could easily argue against this, I understand that, but don't you think that any smart entity or person, once they see the United States is actively acquiring Bitcoin, adding to the strategic reserve, either at a federal level or the state level, that they would understand what's happening then, right? I think it's just a matter of a short amount of time. I think that the United States and the states of the United States will all begin to buy Bitcoin for the strategic reserves this year. So we might have a little bit more time to wait until then, but that's just what I think is happening. So could this be the moment when Bitcoin finally earns its place as a safe haven asset we've all been waiting for? It's not just a theory. Bitcoin has already acted like a safe haven before. Let's rewind back to March 2023. Practically overnight, the US banking system started cracking. Remember this clearly, like it was yesterday. We made videos on this. Silicon Valley Bank collapsed, then Signature Bank, and soon after, Silvergate. Billions in deposits frozen. Fear spread like wildfire, and suddenly, nobody felt safe with their money sitting in a regional bank. So what did people do? They ran to the exits. But here's what's interesting. They didn't just run to gold, they ran to Bitcoin. In just under 2 weeks, Bitcoin surged from $20,000 to $28,000. That's a 40% move, right as traditional finance was breaking down. At the exact same time, bank stocks collapsed. And gold, it rallied too, as it always does in time of panic. But this time, Bitcoin was right there with it. And this wasn't a one-off either. We saw the same thing play out in 2020 during the COVID panic when everything was crashing. And Bitcoin and gold stood tall as the ultimate safety plays. Go back even further to 2015 during the Greek debt crisis. And again, it was Bitcoin and gold acting as life rafts while the other systems took on water. And if there was ever a moment for Bitcoin to prove it belongs in the safe haven club, this might be it. But it's not just private companies stepping in. The US government is now laying the groundwork to become one of the biggest Bitcoin whales on the planet. And they likely, in my opinion, will become the biggest holder on the planet. But we shall see. Right now, Congress is now pushing a bill that would make Bitcoin a strategic national asset. It's called the Bitcoin Act, reintroduced by Senator Cynthia Lummis and backed by a growing coalition of lawmakers who want to create a strategic Bitcoin reserve, one that rivals the US gold supply. The plan? Acquire 1 million Bitcoin over 5 years. That's nearly 5% of the entire circulating supply. And they want to do it without raising taxes or adding to deficit. And if you think this is some fringe idea, think again.
The Bitcoin Act establishes the Strategic Bitcoin Reserve, a federal initiative to ensure that the United States holds a meaningful position in the most important decentralized financial network on Earth. With an eye to fiscal responsibility and innovation, the legislation outlines a plan to phase in the acquisition of up to 1 million Bitcoin, or roughly 5% of its total final supply over 5 years. Importantly, this will be done without raising taxes or increasing government debt.
There it is, not from Twitter, not from crypto influencers, not from the halls of Congress. This bill would not only codify Trump's executive order, it would establish a network of government-controlled cold storage vaults, ensure Bitcoin is held for a minimum of 20 years, and even allow states to participate by storing their own Bitcoin alongside the Federal Reserve. And the implications? Well, yep, they're massive, because for decades, gold has backed America's financial strength. Now, Bitcoin is being groomed to play that role in the digital age. Senator Lummis didn't mince words. She called Bitcoin a national imperative. And the entire pitch is being framed as a solution to the $36 trillion national debt. Sound crazy? Maybe, but so did a Bitcoin ETF, remember? So did banks holding crypto. And so did $1.3 billion from GameStop going into Bitcoin. And now all of that is a reality. And so if you're wondering whether Bitcoin is going mainstream, it's already being written into the playbook, literally. And if the US is about to become the biggest buyer of Bitcoin on earth, it's not just the market that's about to change, it's the monetary system itself. We knew this week was coming. The tension has been building and the headlines have been flying. And now it feels like the markets are delivering one last punch. But look a little further down the road, and there's some reason for optimism. Some believe that April 2nd, the day we get full clarity on the new tariffs, could mark the bottom in negative sentiment. And from there, we'd likely begin to see the markets rebuild. And others, they think this is just classic Trump, loud threats, upfront and quiet, deal-making in the background. They're betting the real story isn't the tariffs, but it's the negotiations already happening behind closed doors. But let me leave you with something a little deeper, a little historical, if you will. Back in December 2018, during his first term, Trump called himself the Tariff Man. Markets panicked. The S&P dropped 15%. Recession talks was everywhere. And Bitcoin? People were panic selling at $4,000. But here's what happened next. Seemingly out of nowhere, Jerome Powell blinked and the Fed pivoted. Quantitative tightening ended and everything reversed hard. It's just too easy these days for the political pressure to push a button and print money and end the pain. Right? It's just too easy and too much political pressure on all sides. And what if that wasn't just history? What if it was a playbook? And what if Trump, the Tariff Man, is running the exact same play again? Only this time, it's different, because today, Trump isn't just slapping on tariffs. He's fully backing Bitcoin. And today, the federal government is removing obstacles, not adding them. And today, companies brag about putting Bitcoin on their balance sheets. So yeah, things might get rocky this week, maybe even uglier. But if you've been in these markets long enough, you've seen this before, and you know how it ends. History has a funny way of rhyming, because every time the system starts to shake, Bitcoin doesn't break. It breaks out. So stay sharp, stay prepared, because the next chapter of this story is about to be written, and you'll want to be on the right side of it.